One number changed the entire playbook today, minus 6.27%. That's the SOX index, semiconductors, in a single session. 28 out of 30 components down. The worst chip day since. Honestly, I have to go back months to find something comparable. But here's what nobody's talking about. And it matters. If you're new here, subscribe. Full breakdown linked below. Let me back up because the S&P actually looked fine on the surface. Closed at 7,483, down 22 cents, basically flat. But the intraday story is where things get interesting. The market opened strong, pushed up to 7,520. That's above 7,500, the level everyone's been watching since Tuesday. And then, it just faded, sold off into the close. That's not distribution. That's profit-taking before a 3-day weekend. Big difference. Now here's where it gets interesting. The damage wasn't evenly distributed. This was a sector-specific carnage event. Micron down almost 11%, Intel down 9%, AMD down nearly 7%. Caterpillar dropped almost 7% too. Burry's short is looking smarter by the hour. But while hardware was getting destroyed, software names were catching bids. Meta ripped 9% higher on their cloud business announcement. Palantir up almost 8%. What you're seeing isn't a risk-off event. It's a rotation. Smart money moving from the trades that are extended to the ones that aren't. That's your context for everything that follows. First stock, Intel, down 9% to $127. And I'm going to argue this one got sold for the wrong reasons. Here's why. Daily chart first. Long-term trend at 81. Mid-term at 107. Short-term at 119. All three climbing in a clean bullish structure. Lower, middle, upper, stacked like stairs. Price today? Still sitting at 127. That's above all three trend lines. The drop looks scary as a percentage, but structurally, nothing broke. The upper rail sits around 133. We're still below it, which means Intel is operating inside its established channel. Volume spiked to 113 million shares. Elevated, but most of that was panic selling, not institutional exit. Here's the catalyst that got ignored. Google's next-generation TPU is switching to Intel's EMIB-T packaging technology. That's a multi-year structural win, not a one-day headline. The market sold the stock because semiconductors are crashing. But Intel in this cycle isn't just a semiconductor play anymore. It's becoming an infrastructure enabler. Different story, different valuation. Hourly tells you where the entry lives. Mid-term trend at 126. Short-term at 132. Price at 127. Literally sitting right on top of the mid-term line. On any normal pullback, that mid-term trend acts like a magnet. You saw it hold today. If you're looking at Intel here, the setup is straightforward. Use today's low around 126, 127 as your line in the sand. Stop below 120, which respects the hourly structure. The target? A retest of that 133 upper rail. And if the Google TPU narrative gains traction, the prior highs around 135, 142 become realistic. This is a wrong stock sold-off setup. They don't come around often, and the risk-reward here is skewed in your favor if you can look past the red candle. Second name, AMD, down 7% to $540. And if you watched our last episode, episode 37, the H1 wrap, I told you to wait for a pullback to the 540 zone. Today the market gave you $540.88, 16 cents from our target. Now the question is, do you buy it or is this a falling knife? Daily chart shows you why this level matters. Long term at 346, mid term at 459, short term at 527. All three are miles below price. AMD has been in a structural re-rating for months. We covered this last episode. The daily upper rail sits at 510. Price is still $30 above it. Even after today's drop, AMD hasn't lost its channel. That's important. Volume was 28 million shares. Heavy, but not panic level for a name this liquid. The chart view range tells the full story. From a low of 188 to a high of 565 over the visible period. Today's 541 is sitting right in the upper third of that entire range. This isn't a broken stock. It's an expensive stock taking a breather. But we trade the hourly for entries, not the daily. And the hourly picture is more nuanced. Long-term at 496, mid-term at 522, short-term at 550, price at 541, below the short-term trend, testing the upper rail. That's the exact zone we identified 2 days ago. The question now is whether 540 holds as support or becomes a launching pad for further downside. My read? In a thin holiday market with SOX getting hammered, I wouldn't size aggressively here. But if you wanted a small starter position with a tight stop, say below 520, respecting the hourly midterm, the asymmetry is decent. AMD at 540, with a 615 price target from Wells Fargo, still offers upside even in a rotation environment. Just don't treat this like a sure thing. Holiday markets have a way of making smart setups look stupid in 24 hours. 2 things before I wrap. First, tomorrow, Thursday, July 2nd, is the last trading session before Independence Day. The market closes Friday. Holiday liquidity means wider spreads, erratic moves, and less depth on both sides. Whatever you do, manage your size. Second, the rotation from hardware to software is real, but don't assume it's permanent. Semis have been the leadership trade for 18 months. One crash day doesn't end an era. It creates opportunities for the traders who can separate noise from signal. My call? AMD at 540 is a zone, not a button. Watch whether it holds through Thursday's close. If it does, you've got a defined entry with a clear invalidation level. If it doesn't, you saved yourself money by waiting. Intel at 127 is the contrarian play in a sea of red. Wrong stock, wrong reason, right price. That's Wednesday. Charts and levels in the description. Subscribe if this helped. Trade safe.